I do believe that there are a confluence of trade levels up in this window up here, not here. There's obviously quite a bit of demand for this asset down in this level here. I don't think shorting here makes a lot of sense. So if anything, also too, you can just draw a really simple trend line, right? Just play connect the dots. Boom, boom. Oh, hello. Talk about confluence of levels, eh? Damn. NVDA here. It was kind of the market darling of late, and I think we did come down into an important level there into the options expiry. This is a really good example where they say that most of the options business will actually be done on the Thursday. Then the Friday is actually really quiet. It's a really almost dead day. And what a perfect analogy of doji there. So they opened up NVIDIA, brought it back down against the lows, and then cranked it back up here. And, our basic rule about trading ranges is we should expect at least a 38.2 bounce at any given point in time, which would be nothing more than maybe a test of this pivot. You can see pivot low, pivot high, this thing gap lower, and then rallied all the way up into this level. You might even want to, on your charts, just draw a nice little high to low trend line there. And my hunch is that's probably where short-term resistance comes in against that 38.2 there. This trend line in particular was drawn off of just some structural lows here. Higher highs and higher lows. It's interesting to see how the market did bang into that trend line there. And of course, our little head and shoulders thesis would suggest something maybe along these lines. I don't really mind that as a bit of a pivot. And interestingly enough, like we said, dead cat bounce. I think you're probably going to see this thing jump up into 38.2 levels, probably up into here. But my hunch is that over probably the next couple of weeks, I think people had pointed out that China put in an outside upside key reversal on Friday. So, maybe the market can enjoy a week or two of reprieve from all this selling. I wouldn't be surprised if you see something along those lines. And then, into the end of September, getting ready for October. October is usually, the test low, and do we actually punch lower? Remember, October crashes and all that kind of stuff. So I wouldn't be surprised. I don't know if it's going to be this violent or not, but I wouldn't be surprised if our future looks something along these lines here. So, looking at that 38.2 going back up, that's what that level is there. But if we also do like the whole kit and caboodle, yeah. So actually, I'm getting pretty good at this eyeballing this stuff. If this is indeed a head and shoulders top, then, you're probably going to get some sort of test of that level there. And if this is a head and shoulders, you would expect this not to take out that high. And also you see pretty big gap right here around good old Mountain Man. And I suppose, for all the, I think the, what do they call them? The fair value gap, something along those lines. That ICT guy seems to be pretty popular these days. I might suggest that you can see there's a bit of back and forth against that low there, and then a bit of back and forth against this high here. So my hunch is that if you were going to do that fair value gap kind of conversation, it would be right into that reload zone. Pretty cliche. We talk about, having multiple reasons to justify taking a trade, confluence of levels. You've probably heard me made reference to that before. I do believe that there are a confluence of trade levels up in this window up here, not here. If anything, guys who are going to be buying against the bottom ends of ranges, keep in mind that that was a pretty powerful key reversal low. There's obviously quite a bit of demand for this asset down in this level here. I don't think shorting here makes a lot of sense. So if anything, looking at that chart, hopefully that gives you food for thought. Also too, you can just draw a really simple trend line, right? Just play connect the dots. Boom, boom. Oh, hello. Talk about confluence of levels, eh? Damn. So there you go. That's my gift to the interneting right now. Is damn, that's a hell of a level right in there. But here, no, I don't think that's a good place to short. And it's not a bad idea to watch the market darlings, because usually they say that when the market darlings start puking out and everybody starts getting embarrassed and bearish and stuff about the market darlings, and oh my god, must have made a terrible mistake buying this, That's usually when the market wants to pivot. Also, too, I think it's interesting if we circle around. Tech usually does poorly when oil prices are rising. When oil rallies, tech usually does poorly. Why? Because purchasing managers only have so much money to spend. And especially if you have tech, NVIDIA, lots of companies are going to be buying NVIDIA equipment, especially, I suppose, with AI. And you're probably going to have a lot of, companies exploring that alternative. So the point here is that when oil prices are rising, purchasers managers have to allocate more of their budgets towards energy, fuel for the trucks, heating oil for the furnaces, electricity for the lights, et cetera, et cetera, et cetera. And so they have to pull money out of other things. Okay, maybe we won't invest in this AI chips and stuff like that, and then put it off for now. And so tech stocks usually fall. And then the exact opposite. When oil prices fall, companies say, well, maybe we should start thinking about putting money to efficiency, and tech names start to catch a bit of a bid on anticipation of sales. Also, too, I would say that the iPhone is the iPhone 15. I just noticed, and I've told you guys this before, I think a really good way for you to judge whether assets are going to do well, stock wise in the market, moving up, moving down, is just ask yourself whether companies are advertising and whether they're getting their name out into the public. And I noticed as soon as companies start advertising in earnest, especially on platforms like Google, that YouTube platform and stuff, something's about to happen. And so it doesn't surprise me. We had a ton of bearishness coming into the market down here. Remember, we had like FUD about the Chinese government was going to outlaw the use of Apple products by their employees. And then people actually went around China and said, well, these government people are still using the iPhone. So I don't know what's going on here. And it turns out that that story was written by some sort of anti-CCP blogger guy, and it was all just phony baloney. And why? Because probably they wanted to knock the stock down and see if they could get it as cheap as possible. And now when I like load up YouTube and stuff, oh my God, it's just iPhone this, iPhone that, titanium this. And what's really interesting is that Apple doesn't actually even have to do any of the advertising. It's all the telephone carriers that actually do the advertising and sign up for the new iPhone 15 and for a 2-year plan or whatever, and we'll give you the phone for free. So, in a weird sort of way, Apple's got just an absolutely fantastic marketing plan here where they just let all the telephone companies advertise their product. So, it doesn't surprise me to see Apple rallying here. And, W's are W's are W's. If this thing perks up through the top here, we all got to start thinking about some upside objectives, right? And interesting, 2.618s. Good old Bombs is just going to be nothing more than a test of the previous highs here.